I'm now joined by Dirk Schumacher, who is ECB watcher with Natixis, and I will put that question straight to him. What are we expecting from today's meeting?
Oh, we're expecting not much. We're expecting at best a hint that in June the Governing Council will reassess the APP, which will probably then lead to an official ending or announcement of an ending by September. But today's meeting we don't expect much.
Let us look at when we might get some more information. Will it be June or July? What do you think? And will we see a tapering or won't we see a taper given the downward revision in growth?
We expect in June an announcement that the APP will end in September. There will be a tapering thereafter by 10 billion, we think, so that by December net purchases will end. It could be that they delay to July. In June you get the staff projections, the updated. You could hang it onto them and say we have now sufficient confidence that the upward trend in inflation is for real. So June is our best guess that we'll get an announcement regarding the end of the APP.
Let us look at potential market reactions. Do you think, as we are talking about a potential tapering for so long now, do you think the market has it already priced in, or could there be some gyrations on the market?
I don't think so. I mean, they already tapered in the sense that they reduced net purchase from 80 billion to 60, from 60 to 30. It hasn't really caused much of market reaction. So it should not surprise anybody that the ECB will end the APP, and whether they taper or not, that may still add a bit of uncertainty, but it shouldn't make much of a difference at this stage.
How concerned do you think is the Governing Council, especially Mario Draghi, about the somewhat cooler economy, and how does this play into their inflation forecast?
And the question is it just a normalization? We've seen very strong growth at the end of last year, beginning of this year, and it was expected also in the ECB's forecast that growth would slow, and we've seen that. The question is it more than slowing to a normal rate or a 2% annualized rate? Well, we still see. I guess they won't change their assessment that the growth outlook is still positive, and therefore the inflation outlook is still relatively positive, but it's still an open question at this stage. The fact that in April the PMIs, which we regard as the best short-term indicator, have stabilized is good news in that sense. It's really more a normalization of growth and not much more, but we shall see. And obviously there's some risks outside there, including the trade war potential, and that still remains an open question.
And the lower euro exchange rate, could that actually offset somewhat the cooling down or the normalization of the economic growth outlook?
I don't think the effect is that big. Oil is probably the more interesting variable to watch in that regard. We've seen quite a significant increase, obviously, in the oil price, and if it were to continue, that could dent growth, push up inflation, which is an unfortunate mix, obviously, for the ECB. I don't think the exchange rate at these levels is really an issue.